For this next video lecture, so we will be discussing about the auditor's objectives in conducting an audit. Okay. So the objectives of an audit of our financial statements is, of course, to enable the auditor to express his opinion. Okay, so his opinion will be based on the audit evidence gathered, okay, which will support his expression of conclusion whether the financial statements are in accordance with the applicable financial reporting framework in all material respects. So basically, this is the main objective why we do the audit. So in conducting the audit, so as to achieve its objective of expressing an opinion, the overall objective of the independent auditor is to obtain reasonable assurance. So how to obtain reasonable assurance? This is by gathering, again, appropriate and sufficient audit evidences. So reasonable assurance means high assurance that the financial statement is in accordance with PFRS, but it is not absolute assurance, meaning it's 100% in accordance with PFRS, because in this case, as mentioned before, the auditor will consider materiality in the conduct of the engagement. So meaning, those which are considered to be immaterial may not be included in the evidence gathering. Okay, and there are also audit risks that he may commit during the conduct of the audit. So that's why he cannot give a full 100% assurance on the conformity of the financial statements to the standard. That's why it is only on a reasonable assurance or level. High but not absolute. Okay. So about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, and to report on the financial statements in accordance with the auditor's findings. Okay, because there are certain limitations, okay, of risk and materiality. Okay, so that's why only a reasonable amount of assurance will be provided and not absolute. Okay, so the objective of an audit cannot be fulfilled unless the auditor achieves the overall objective. Okay, so in all cases, when the overall objective of the auditor cannot be achieved, so our standards require that the auditor will modify his opinion, or he can even withdraw from the engagement. So what are the circumstances where the auditor cannot fulfill or achieve the overall objectives of the audit? Okay, so before we have mentioned some such as limitation of the scope of the work of the auditor. So in that case, he cannot obtain appropriate or sufficient audit evidence to support his opinion. So that's why he can modify his opinion, or he can even withdraw. Okay, so withdrawing from the engagement is the last option. Okay, so that is an example. Okay, another is the following are the concepts that provides the basis for a proper understanding of the overall objectives of the auditor. So the first is materiality. So we've mentioned about materiality before and earlier, that only material amounts or evidences should be considered in an audit. So here, materiality should be determined first, okay, before gathering the audit evidence. And those which are considered to be immaterial will not be considered or part of the audit evidence gathering. So then, next is audit risk. Okay, so we've also mentioned this before and earlier, that because of the inherent limitations on the part of the auditor, and as well as on the nature of the business and structure of the entity, so risk is inevitable. However, the auditor, by planning the conduct of the audit and by following the procedures, he can minimize this audit risk. Okay, so audit risk means that he may express an inappropriate. The auditor may express or can express inappropriate audit opinion. That is the audit risk, because the opinion is influenced by the evidences that he gathered from the process, okay, and other risks that is present, especially in the entity. Okay, next, sufficiency and appropriateness of the audit evidence. So we've mentioned also this before, that in order for the auditor to support his opinion, he must gather sufficient and appropriate audit evidences. So, meaning only those which are material, considered material, will be included, and not all information that is available are appropriate. Okay, the auditor should evaluate its appropriateness and sufficiency, okay, by using and following the standards and his professional judgment. Okay, professional judgment. Okay, so in this case, we mentioned before that the audit is conducted only by a qualified practitioner. So, in an audit, normally this is if that is from the CPA firm, so this is a team, okay, of auditors. So they have their senior auditor who is well experienced of auditing process, okay, who also have the enough or vast knowledge about the auditing process and managing his subordinates and so on. Okay, so in this case, he should direct his subordinates or junior auditors in the conduct of the audit so as to obtain sufficient and appropriate audit evidence, and to also perform with professional skepticism, and to make sure that the process was conducted in accordance with the standards on auditing. Okay, so that's how it is done. Next is professional skepticism. So we also mentioned this before, where the auditor really needs to obtain sufficient and appropriate evidence, okay, to support his opinion, and he should not only rely what is provided by the management. Okay, in fact, in gathering the audit evidence, the auditor can ask the outside party, which are related also to the account, for example, in a financial statement. So, an example of that is the clients, which has the receivable account, or even the supplier, where the entity has payable account. Okay, so they can obtain audit evidence from those outside, or parties those outside of the business entity, because it is considered to be much reliable, okay, compared to that of the evidence that is gathered only within the entity. Okay. Another is inherent limitations. Okay, so we have mentioned about the audit risk. Okay, so this is the risk of the auditor expressing an inappropriate conclusion or opinion. Okay, so aside from that, this risk is also influenced by the limitation of the auditor, that he will not detect any misstatement, or he detected a misstatement, but that is not actually a misstatement. Okay, another is the inherent limitation, which is related to the entity, where the account or the nature of their business really has risk that is involved and cannot be minimized. Okay, as well as the control risk, which is related to the internal controls, where the internal control is not effective. Okay, all of this influences the audit risk, okay, which are considered to be limitations in an audit. Okay, so those are the auditor's objectives in conducting the audit.